about the need for reform of the world's currency system. So I would now like to turn to Mr. Min Ju, Deputy Managing Director of the IMF, to give his perspectives on current challenges, and perhaps also to give a comment on the new currency system that the President has advocated.
Thank you, Mr. Chairman. I also would like to take this opportunity to thank Mr. President for the invitation. And it's a great honor for me to attend this very distinguished forum, and a great honor for me to speak to this very distinguished audience. I would like to make a few points. I would like to share with you all views about the global economic situation and all views about the regional economic and financial situation as well, and what we can do to be helpful. The global economic and financial situation still facing serious challenges, although after 3.5 years crisis. The three issues, the first issue is the growth. The growth is slowing down. We forecast this year the global GDP growth rate probably will be 3.5%, lower than 4% last year. The second issue is the growth become more divergent. The advanced economy has a much slower growth rate. This year, 1.5%. European will run into a mild recession. Lower than 2.2% last year for advanced economy. And emerging market rather have a strong growth this year, roughly 5.8%. And the last year, the emerging market also have a 6.8% GDP growth rate. So these two growth rates are really diverging more and more now since the crisis started 3 years ago. This year is particularly important because end of this year, the emerging market low-income country will account for more than 50% of the global GDP, although still PPP measure. It's the first time in modern history the emerging market and low-income country be able to account for more than half of global GDP, which obviously is causing profound change because it's really changing global demand function. It's really shift many fundamental issues in global financial and economic situations. For example, when emerging market and low-income countries account for 50% of global GDP, they account only 19% of global financial assets. So we expect to see massive capital flow will move away from advanced economy, move into the emerging market. Many things will happen. For example, the global manufacturing restructuring. For example, the global service sector restructuring as well. So this is a very pivotal time to see the growth change and the growth change in the pattern. But that's not all the story about the growth, because we're in a deleveraging process rather than normal process. The deleveraging is nothing but all against the growth. When you have a deleverage, the government has to cut, there's no money for stimulus. When you have a deleveraging, the corporate have to make the balances, no money for investment. When you have a deleveraging, households have to save, not consumption. When you have a deleveraging, banking will lend less. So all they were against the growth. So what we'll see, the whole world will run into a moderate growth period in year 20. I think that's the very important background for all of us and for all of you here today. The second issue is the debt. The debt is still way high. Although we have a lot of austerity programs going on here, but we forecast, for example, in the advanced economy, the debt ratio is still on the upside, not on the downside. The debt ratio to GDP will not be able to stabilize until year 2016. At that time, the debt to GDP ratio could be as high as 116%. That's not all the stories. Does household debt ratio still way high and it drop a little bit? Not that much. The banking debt ratio still way high, and the corporate debt ratio reduced in many Fortune 500 big companies, but not all of them. So the whole world have rather high debt. Reduce the debt is a long-term structure issue. Will take more effort in coming years. The third issue is financial stability is not warranted yet. The market stabilized a little bit since November last year, given the European policy, particularly ECB policy, but volatile again in the past months. We see the volatility in the sovereign market. We see the volatility in particular in banking sector as well. We see the oil prices very volatile and the food price volatility increase as well. And we observe the capital flow become ever volatile. So there's still a lot of volatility in financial markets as well. So add them together. Yes, we still have a growth, but we're still facing tremendous challenges today to the global financial and economic situation. Now the second point to the region. The region weathered the crisis quite well in the past few years. Last year, for example, the regional oil export country be able to reach the growth rate 6.6%, and non-oil export countries be able to reach a growth rate 6.1%, which is very good. Kazakhstan lead by having a 7.5% GDP growth rate last year, as the President mentioned, and this year we forecast will have 6% GDP growth rate, which is very strong. And the region carry out diversification, which really making progress because the region have to diversify to balance between the oil sector and the non-oil sector. We observe their progress here. For example, in Kazakhstan, last year, the non-oil sector growth rate is 6.2%, which is very strong and very good. The region is still facing tremendous challenges as well. Externally, the slowdown global growth will slow down the demand for the regional export on energy and non-energy commodities. And the financial volatility obviously increase the volatility external shock to the region. Particularly, the capital flow can be very volatile, and the region still very much depends on the external capital flow as well. We observed in the past few years, capital flow dramatically move into the emerging market and move out. For example, move out 2008, move in 2009, and move out 2011, and recently move in again. So capital flow can be very volatile. And internally, continuous diversification, I think, is still the key challenge for the region, as the President mentioned in his speech. I think it's absolutely important issue as well. And to make sure the financial sector is stronger and healthy to prepare a possible external shock is also absolutely important challenge for the region as well. Now, what fund can do to be helpful? We commit ourselves to the region and we expand our surveillance from pure current account to more macro policy to help our members to assess the macroeconomic situations. We developed a more flexible instruments to give the members support. For example, before, we always have after-crisis instruments. When you have a crisis, we move in to help them. Today, we have a precautionary liquidity facilities. We have a flexible credit liquidity to help the members to have the program before they see the situation getting worse. So we really move in and we double in our resource for low-income country to $1.7 billion as well. And we do more spillover report, try to help and for the region and country and to understand what is the global situations. So that's the reason also I'm here. I had a very good meeting with Mr. President and with the Prime Minister to exchange views about the country, about the global, and about the region as well. As our chairman mentioned, for the global monetary system, I think it's absolutely important to maintain the global monetary system stable and to maintain the global monetary system reflect the proper economic changing and a proper economic growth. So we're working very hard to do the new reform on the monetary system as well. We carry out the 2010 quarter reform. We very much want to be able to complete this reform, and we are starting a new round of quarter formula reform discussion already. I agree with Mr. President. He mentioned a stable, a reliable global monetary policy is absolutely important for everyone in this war. For this regard, I appreciate this conference to bring all the people from the war to this place to discuss the war situation. And I will also appreciate our host country, Kazakhstan, the contribution to this conference as well. Thank you very much.
Min Jue.